All right, what's up, YouTube family? It's the one and only Terry D, the motivational speaker, the CEO of Too Easy FX Academy. All right, be sure to like and subscribe to my channel, as I will be giving you more valuable information just like this one. So today we're going to be talking about where you should set your stop loss and where should you set your take profits. Okay, in my group, I typically say take about 80% of the take profit or stop loss. Okay, people always ask me the question, what do you mean by taking 80%? In this video today, I'm going to explain to you what I mean by taking 80%. Okay, so first off, like I said, remember to go like and subscribe to my channel, and let's get into the video. Okay, so let's look at Euro USD. All right, so let's talk about, in a way, you guys are going to get the best of both worlds, because I'm also going to talk about sniper entries as well. Okay, so give me 1 second. So Euro USD, let's look at H1. All right, so if I'm looking at this and you're using my moving averages strategy, okay, if I'm looking at this and you're using my moving averaging strategy, I'm typically waiting for this candlestick to come touch or get close to this moving average and then reject back down. Okay, that's what I'm typically looking for if you're using my moving average strategy. Now, some of you might ask, well, how you know when to get in and how you know when to set your take profit and stop loss, okay, or where? I personally always go to the M5. Okay, I use the M5 as one of my confirmation time frames, because what normally happens, guys, follow me close, is first, if you're using a moving averaging strategy, right, or you're using an RSI strategy, first you're going to see RSI low on M5 or high on M5, like as we speak right now. Okay, if you look at M5 right now, it's at 74.75 RSI. Okay, so that's a great indication and a great sign that your USD is going to drop sometime soon. Okay, so I come down to the M5 and I see that it's shooting up. Okay, obviously it broke my moving averages here. Okay, so since it broke my moving averages, that let me know that it's going to continue to go up for quite some time, and as you guys can tell, it's starting to drop. Okay, remember, all I did was look at the RSI, right? So first thing I'm doing is looking for confirmation, and I'm also looking for the bottom of this wick on this candle. So anytime you see a wick at the bottom of a candle, that means that it's going to continue to push up, right? So then I'm going to go to M15 and see what M15 doing. Okay, so if M15 closes above this 50 moving average, okay, if it closes above this 50 moving average, then it's also going to continue up and potentially go to this 200 EMA. Okay, I know you're wondering why I'm telling you all this. Well, follow me close and I will start to explain to you why. Okay, so let's say let's look at this right now. RSI is at 57 on M15, and remember, on M5 is at 75. And like I said before, you see how wicked out right here? That means it's going to continue to push up. So that means on M15, it's going to continue to push up. Okay, so if I would see, if this breaks this, what time is 2:51? So at the top of the hour, which would be 3 o'clock, if this M15 candlestick closes above, then I'm placing a buy and I'm going to ride it up. Okay, so what I would do is I would come here, set a horizontal line, and I'm looking for a level. Okay, there's certain resistance levels that the market has to push through before it actually decides to continue to go up or down. So if this continues to go up, let's go to M5. Okay, so this actually looks like it's at a high right now on M5. Let's go to M15. So I would say if it does break above this moving average, I would set a take profit right here. Okay. And that's only if this candlestick right here closes above. So that's roughly, that's 123.35 to 48. So that's roughly about, let's say, 10 to 12 pips. Now, when it comes to the 80% now, the 80% mark would actually be, let's see, give me a second, be probably about right here. Okay. So obviously that's a little bit less pips that we're catching, but this would be safe zone. Okay. This would be the safe zone. The reason why I say this would be the safe zone is because I'm actually going to get in on this one. I'll show you guys. So let's go 120. What is that? Was that 45? I believe. Let's just do 44 and let's do a buy. Okay. So, yeah, that's about right. So, the reason why I say this is safe zone, because do you guys see at this level right here, okay, that is sort of, that's a little bit underneath the resistant level here. Hold on, give me a second. Guys, gonna give me issues. So this would actually be the resistant level here that it has to push above, right? And so what I say 80% mark is about where I have my take profit set, about right here. Okay, because this right here would be a key level, right? This would be a resistance zone. And just to confirm this, let's go M5. Let's see, where is that resistance level? So my take profit, yeah. So as you guys can tell on M5, where I have my horizontal line drawn out, that's also a resistance level. Okay, so you do see, now I probably need to move this, my take profit, but you do see, now if you use my moving averaging strategy, you do see that it's actually going to come to this 200 EMA and then shoot down. Okay, so again, why am I telling you this? My take profit is up here. Okay, take profit is up here. Now, the one thing that we're going to fumble against is for the candlestick to close above the 200 on M5. So for it to close above the 200, which the 200, guys, is my blue here. Okay, if you've been following me, you know this is my 200. Okay, so if this candlestick pushes above my 200 mark, then it will hit my take profit. And like I said, that right there is technically a level, a certain level that it has to break above. Okay, so that's why I set my take profit a little bit underneath. Okay, because this would actually be the resistance zone. As you guys can tell, do you see the two? It's one candlestick here, and then there's one candlestick here. Okay, and you see how the wick at the top, and then it shot down. Okay, that can potentially happen again, because normally you get one touch, then you get two touches and three touches, so on and so forth. But that's the reason why I say take about 80% of your trade, or 80% of your take profit. Typically what people like to do is they come to H4 or H1, right? And this right here, this would be the support. Okay, so since it's underneath the support, this would be a resistance zone, because this is actually whenever the market decides to drop down, right? So if it shoots back above here, which I'm more than likely it will, then that means it's going to come back up and test this 20 EMA. So sure, we might miss out on some more money, but at least I'm getting at least 80% of that. So that means no matter what, I'm still going to make roughly $100 to $200, right? Let's see, still negative on the trade. And you know, I'll follow this up later, probably sometime tomorrow, the next day. But that's why I say take about 80%, because a lot of traders, they get greedy. Okay, a lot of traders, they get greedy, right? And so M15, as you guys can tell, and I talk about this in a lot of my videos, if it doesn't break above here, guys, if it doesn't break above, then this is going to continue to drop. Okay. Now, I don't think that's actually going to happen. That's not here nor there. Obviously, I'm not going to hold this trade the whole video while I'm in profit. And yeah, so if you guys look at it, I mean, let me see. If I can wait it out, it might actually hit my take profit live on camera. Okay. But anyways, like I say, take about 80%. You know, because as you guys can tell, where I have my take profit drawn out, right here. Okay, I have it drawn out right here. So this isn't a resistance zone. Okay. This would be the resistance. So if this candlestick at least pushes up here, then I get the money. And obviously, if it continues to push up, it's going to push up to this 200, which sure, I might have missed out on a little bit of money, but at least I know it's safe zone for me. So let me actually just go ahead and take this. Okay. Okay. Took that live for you guys. But anyways, I talked about the take profit. So let me wrap this up by talking about the stop loss. Okay, so let's do this. Give me 1 second. So this would be the support zone here, where that last wick. Okay, guys, another tool. You know, I didn't plan on saying all this and doing all this, but another tool to keep in mind whenever you're looking at support and resistance. Your support level is always not where the candlestick is, where the last wick, where the last large wick was. Okay, so that last large wick was here. This would be your support level. Okay, so what I typically do when I am setting a stop loss, which I really don't set a stop loss, I typically hold on, give me 1 second. I typically set my stop loss. So if the support is at 1.2011, I would set a stop loss 5 to 10 pips under the support. The reason why I do that is because for the market to break support, that means that we got a strong bearish trend. Okay. And sometimes, and some people don't realize this, sometimes the market will wick you out and take you out of your trade and do exactly what you wanted. Okay? So hold on. So let's use this as an example. So where I have my horizontal line drawn out right now, okay? When I have it drawn out right now, you guys can tell that you see that wick, okay? Let me zoom in a little bit so you guys can see a little bit better. You see that wick right there? So let's say you know this is your support zone. Okay, so you're going to set a stop loss a little bit right under support. Okay, if you would have done that, as you guys can tell, what did it do? It wicked you out and then it continued up. Okay, see if I can find another one. Let's see if I can find another one. Let's see. See if I find another one. Try to find another support level. Okay. Let's just use this. Okay. Say if you had a stop loss set probably about right here, right? It would have wicked you out here, hit your stop loss, and then continue up. And it does it all the time. So that's why if I have a support level, let me get my shape. If I do a support level here, hold on. If I do a support level here, you see how that wick is touching out just a little bit, okay? I would do 5 to 10 pips under. So if it does wick me out, and that's not even 5, let's say about, so this is roughly about 5 pips under the support level. So that way that it doesn't wick me out. Because 9 times out of 10, guys, whenever you're trading and the candlesticks is at a support level, 9 times out of 10, the market's going to push up before it comes back down. It's crazy. If you just look at it across the board, let me delete this one. So let me go find another pair and let's see what this trade did. So you guys can tell, like I said earlier, the wick is here, and it's probably going to hit my take profit. But obviously, like I said, I took it kind of early, which is fine. Another thing to keep in mind, guys, is whenever you are trading, it is so dangerous to watch it. Okay, that's probably one of the main reasons why I just took that little $20. And as you guys can tell, I made 164 today. Really wasn't really killing the market as usual because the market was really weird today. But anyways, let's go do one more example. Let's go USD CAD. Okay. Let's go H1. Let's actually go H4. Okay. So my support level is already drawn out here. And let's say, trying to find a good one for you guys. Okay. Let's say that you had a stop loss here because you've seen that right here that it kept rejecting. You're just like, okay, I'm going to set a stop loss a little bit underneath, right? And it would have wicked you out and then continue up like it did, okay? Then as you guys can tell, you see that big long wick up there? It drops. That's what I say. These long wicks are so important, okay? Or here you go. Here, I didn't even see this one, guys. Let's see, you got a wick here, okay? Say you have a stop loss underneath the 50 EMA, because you're saying if this candlesticks, if you're using my candlestick strategy, I'll make this video too long. Anyways, if you're using my moving average strategy, okay, and you say, okay, well, if this candlestick breaks this 50 EMA, then I need to just go ahead and get out. And as you guys can tell, that wasn't the case. So it came down. It looked like it broke. It broke the 50, but then shot all the way back up. And you messed up all these pips because your stop loss would have been right underneath the 50 EMA. I personally probably would have set it. Oh, well, that's honestly about right, but probably would have set it a little bit about right here. And to be honest with you guys, on something like this, I probably wouldn't have set a stop loss because at this current time, yeah, like I would have noticed that there's no moving averages down here, right? Support is all the way down here, so I wouldn't even set a stop loss. I would just set a take profit to about what a 200 EMA is at. Okay, so that would have been, if you would have did that from on the wicks to about right here, that would have been roughly about 20 pips. And you would have got out. Obviously, would have missed this up here. But the reason why I would have got out so soon is because sometimes the market does what it wants to do, guys. Sometimes the market does the complete opposite of what you want it to. But anyways, hopefully that was kind of, it wasn't too long. And it was very informative. I'm sure some of you guys will get it. Some of you guys won't get it. Like I said, I will be doing more follow-up videos like this one. But anyways, that's all I got for you guys. That's typically where I set my take profit and stop loss. I always set it a little bit above that level. Okay. Just to refresh if you made it to this end of this video. I would set my take profit probably about right here. Okay. Because these are support levels, or this is almost a resistant levels here. So I would have said a take profit probably about right in here. Okay, sure you would have missed out on this, but hey, this is a resistance. It's too close for comfort, so I'm going to set it a little bit underneath the resistance zone and take about 80%. Same thing with stop losses. I'm going to set it about 5 to 10 pips underneath so it doesn't wake me out like it did here. Okay. And the market does see your stop losses, guys. If you didn't know, the market does see your stop loss, and it wicks you out on purpose so it could do exactly what you thought it was going to do. But anyways, sorry I made this video a little bit longer than I wanted to. Just wanted to make sure that I explained as much as I could. Other than that, this is the one and only Terry D, the motivational speaker. And remember to put God first, and everything will work itself out. Peace.